I just turned 23 years old, and every year on my birthday, I make a YouTube video going over my net worth and what I have invested in what accounts and what I'm investing into. However, in that video, I don't go into crazy detail into what investments I'm actually holding and the overall breakdown of my entire investment portfolio. So today, we're gonna do just that. I've never actually taken the time to sit down and break down my entire investment portfolio, and just doing it now here for the first time, the results were quite shocking. But before we get started, I first need to mention that this is not financial advice. Please don't take random guy in the internet's advice as gospel, and please don't sue me. This is just what I've been doing over the past couple of years, and it's allowed me to save up a $225,000 investment portfolio. So if you want to see what it is, let's get into the numbers. Okay, so on the screen right now, on the very left-hand side, we have my actual investment portfolio as it sits today. In the middle, we have a nice pie chart breaking it down even further. And then on the right, it's what I would ideally love to have my portfolio to be at. So let's break down my current investment portfolio, sorted from the largest pieces down to the stuff that's pretty insignificant. And the number one position that I hold in my investment portfolio is gonna be Ethereum, which is a cryptocurrency, if you guys didn't already know. And I'm holding $116,000, which equates to almost 52% of my portfolio. Yeah, that's a lot of money. And the reason Ethereum is such a high percentage of my overall portfolio is because when I was 18 and 19 years old, just getting into investing, I started learning about cryptocurrency, and I was really sold on the idea that this was going to be the next big thing and the best investment that you can make in the coming decade. And that kind of turned out to be true, at least so far. Because when I was 18 and 19 years old, almost every dollar that I made went into Ethereum, and I probably invested somewhere between $40,000 and $50,000 of my own money into it. And then just a couple of years later, now when I'm 23, it's sitting at $116,000. And I'm currently trying to get that percentage down to something a little more reasonable. But I don't want to sell my Ethereum to balance out my portfolio, partly because I have a lot of capital gains within this and I don't want to pay that massive tax bill. And on top of that, I still believe it is a very good investment coming up in the next couple of years. So instead, I've been investing into other assets that we'll get into here shortly to try to balance out my portfolio that way. But I literally don't make enough money to balance out my portfolio and keep up with how much Ethereum is making me on a day-to-day basis, which is a very good problem to have. Moving on to my second largest position in my portfolio, that's going to be in VOOG, and it's currently sitting at just under $29,000, which equates to 12.82% of my overall portfolio. VOOG is just your standard S&P 500 index fund, except that G stands for growth, so this fund is slightly more skewed towards technology and growth stocks. And all of this money is currently held within my Roth IRA, which I've been maxing out for the past 3 years, and VOOG is the only holding that I have within my Roth IRA. The next position that I hold is UNH, which is United Health Group stock, at just over $27,000, which equates to 12.08% of my portfolio. Now, I am not a proponent of holding single stocks within my portfolio. I think it takes way too much time and mental energy to be constantly researching companies and queuing into earnings calls and yada, yada, yada. However, I'm currently an employee of United Health Group. I work there as a software engineer, and so I got this stock through being an employee there. A little over half of this money came as my sign-on bonus when I first started at the company, and then the remaining just under half comes from my employee stock purchase plan, and I invest 10% of each paycheck into United Health Group stock because I get to buy it at a 10% discount. Basically meaning I get an instant 10% profit whenever I buy this stock. My plan for the money that I have within United Health Group stock is to wait for it to become long-term capital gains, and then I'm going to sell it and use it as a down payment for my first property coming up here maybe in the next couple of years whenever I'm ready to pull the trigger. And so I'm just using UNH stock as a means to get a little bit extra savings utilizing, my bonus and that 10% discount I get for buying the stock to kind of propel my savings rate towards buying my first house. The next position is going to be my Vanguard Institutional 500 Index Tracker, which is just a fancy way of saying another S&P 500 index fund, and it's currently just under $24,000, sitting at 10.64% of my portfolio. This is the money that I currently have within my 401k account that I get through work, and it has limited options of what you can invest in. And this was just the most standard S&P 500 index fund with the lowest fees that I had available to me. And it's a pretty basic account. There's not much to say about this one. The next entry is actually my cash position in my portfolio, which is valued just over $15,000 and sits at 6.7% of my overall portfolio. Now, my cash is just made up of my emergency fund as well as my checking account, and so this technically isn't an investment, but the money is there in case I need it. I currently have all of my cash sitting within the SoFi bank accounts, earning a nice 3.8% interest on my high yield savings account and 1% on my checking account. I feel like I have a good, healthy amount of cash in my overall portfolio. The $15,000 in here right now breaks down to just over $10,000 in my emergency fund, and then the remaining about $5,000 is in my checking overflow because I've got a couple of credit card payments coming up here, and then I like to keep at least $1,000 in my checking account at all times. The $10,000 that I have in my emergency fund equates to just under 5 months of emergency expenses, which works out pretty well for me because I'm a bachelor, I've got no dependents, and my job is pretty stable, knock on wood for that one. And so somewhere between 3 and 6 months of expenses in my emergency fund is just fine. In the future, especially when I buy my first house, I'll definitely want to beef this up a little bit to at least 6 months of emergency expenses, but preferably somewhere between 9 and 12 months would be ideal. But moving on to my next position, that's going to be within VOO, and I have $11,719 in it, which equates to 5.21% of my overall portfolio. VOO is just another S&P 500 index fund from Vanguard, and it's probably the most well-known and common S&P 500 index fund out there. But there's not really a whole lot for me to say about this. I've said it before, S&P 500 index funds are great. It's what I want the majority of my investment portfolio to be, at least when it comes to the stock side, and so I've got more of it here. And this time, all of the VOO is invested in my standard brokerage account that I hold through Robinhood. Now we're getting into a pretty insignificant part of my overall portfolio. Most of these plays, or almost all of these plays, I purchased because I made a YouTube video about AI picking my stock portfolio for 30 days, and I invested $1,000 into whatever portfolio AI spit out at me, and it is these following positions. Number one is SPY, and I have $318 in it, or 0.14% of my overall portfolio. We're going to skip the Bitcoin for now. Next up is Nvidia, which I have $183 in it, and it makes up 0.08% of my portfolio. Next is IWM, which is a Russell 2000 index fund. I have $156 in it, or 0.07%. After that, there's VXUS, which is an international index fund, $114 or 0.05%. XLE, which is an energy ETF, $101 or again 0.05%. Then there's Apple, which is at $95 or 0.04%, and then Tesla at $94 and 0.04%. And I believe I'm up a couple of percentage points from when I made that video, so good news. Then the last position I have in my portfolio is Bitcoin at $282 or 0.13% of my overall portfolio. Now this Bitcoin, I actually mined myself with a PC I built while going to college, and I probably mined only the $50 worth at the time when Bitcoin was worth way less, and today it's worth $282, which is a nice gain, and I look at it as free money because all I had to do was click one button on my computer and boom, 300 bucks. Now, with all of those positions combined, my overall portfolio totals $224,923. However, if I could rebuild my portfolio from the ground up, I would definitely make a few changes, which I'm actively working towards right now. But my ideal portfolio is as follows. Firstly, I'd put 60% of my money into standard S&P 500 index funds, and I'd use the same index funds that I'm currently using. That's VOOG inside of my Roth IRA, the VANG 500 index tracker inside my 401k, and then VOO in my brokerage account. And ideally, all three of those combined would equal about 60% of my portfolio. Next up would be 30% into cryptocurrency, and that would be split equally between Bitcoin and Ethereum. I think both of these assets have amazing use cases and great potential over the coming decades, so I'd like to have a healthy amount of cash into each of them. As my portfolio sits today with 50% in Ethereum, I think that's just too much risk for my overall portfolio. I do rationalize it because I am so young that I have so many years, and if this asset class goes where I think it could go or where it's heading as of today, I think it'll be a very wise decision. But I don't like having too much of my overall portfolio just in one asset. It's just far too risky, too big of swings, and in the future, I'd like to balance that out a little bit. Then I'd like to have 5% of my portfolio sitting in cash, and that'll be held in my emergency fund and my checking overflow like I have today. But then anything on top of that to get it to that 5%, I like to just have in a high yield savings account sitting on the sidelines waiting for good buying opportunities, like maybe a down payment on a rental property or just waiting on good buying opportunities in the market. And then I have 5% set aside for miscellaneous investment, which is anything from single stock picks to cars to artwork to Pokemon cards. But that would be my ideal portfolio structure and what I'm currently trying to work towards. Now, if you guys disagree with this portfolio or have any suggestions that you think I should add or take away, please let me know. Throw them down in the comments section below. I love taking advice from you guys, so let me know. So there you have it. That's my entire investment portfolio as it sits today at age 23. Now, I know it's a little unorthodox and I've had some crazy twists and turns that have led me here, and there's definitely some things that I would like to change and do differently moving forward, but as it sits, it's worked out pretty well for me so far. Again, let me know what you guys think of my portfolio down below in the comment section, whether you think I'm smart or you think I'm stupid. I love to hear you guys' opinions. But that's all I got for you guys today. I hope you all enjoyed or found it entertaining. If you did, maybe leave a like. I appreciate your guys' support. But with all that said, hope you all have a great day, and I'll catch you in the next one. Peace out.